Joining us right now is Chevron CEO Mike Wirth. Last week, Chevron announced a $75 billion stock buyback and raised its dividend. And Mike, welcome. It's the first time that you're talking to the media since that news first hit.
It is. It's nice to be with you.
It's nice to be with you, too. It's good to see you here. That announcement sparked some big blowback from the White House very quickly. In fact, if I can just read some of this, the White House said at the time, for a company that claimed not too long ago that it was working hard to increase oil production, handing out $75 billion to executives and wealthy shareholders sure is an odd way to show it. We continue to call on oil companies to use their record profits to increase supply and reduce costs for the American people. Now, that is some politics at play. What do you make of what you heard from the White House?
We actually are doing exactly what the White House is calling for. We're staying consistent with our financial priorities and financial framework that we've long had for decades, which is first to prioritize the dividend. We increased it 6%, the 36th year in a row for dividend increases. We increased organic capital spending this year 30% above what it was last year. Keep a very strong balance sheet. And when we have cash excess to those needs, we return it to the owners of the company. We had a prior repurchase program that was authorized 5 years ago when we were repurchasing at about $5 billion a year, and the program was a $25 billion program. We're a stronger company this year. We're repurchasing at $15 billion a year. A 5-year execution of that plan would be $75 billion. It's really no more than that. Last thing I'll say is we had record production in the U.S. last year, up 4%, the highest production we've ever had. We expect to grow the Permian Basin 10%. This year, and globally, we expect to grow at a 3% compound annual rate for the next 5 years. So we're investing in more production, and we are returning cash to our shareholders.
You did not call that just shameful demagoguery, I don't think. It wasn't you that said that. I might have heard someone saying that. Maybe it was a voice inside my head. Maybe it was a voice inside my head saying it. How much of the company do these horrible executives own, Mike? What percentage of it are you enriching there? It's a very small percentage of the company.
It's a fraction of a fraction.
Now, the wealthy shareholders, let's talk about them. Do you have any pension plans? Do you have any teachers' plans that own any of this stock? Do you have any retirement plans that own? Is it just these wealthy fat cat shareholders that you're enriching? Or?
Well, Joe, our shareholders are institutional funds. They are retired.
Would you agree that's shameful demagoguery, or you have a better word for it?
Well, I'm not going to really comment on what the White House said. I'll just say that we understand the world needs more production, and we're investing in that.
It's completely false, and it's not helpful after you've said you're going to end fossil fuel production to then turn around a year later and say that that's what you should be doing. Do you like getting whipsawed? What should you be doing now as an executive?
Joe, the mixed signals don't make it easier to allocate capital. They make it challenging. We try to look through some of the political rhetoric to the fundamental needs of the economy and of the country. We're trying to increase production, to bring prices down, to stabilize markets. And we invest through long cycles, which last much longer than political administrations and election cycles. And so we have to allocate capital on a scale of many decades, not just a few years.
How long for the $75 billion? How many years is that?
We didn't have it time bound.
It could be 5 years.
At the rate we're repurchasing shares right now, it would be 5 years.